How to build a $1 million stock portfolio. Many people dream of building a $1 million stock portfolio, but most never take action. They believe it is too complicated, risky, or only for the rich. The truth is that anyone can build a $1 million portfolio with the right strategy, discipline, and patience. In this video, I will show you exactly how to grow your stock portfolio to $1 million. Even if you are starting from scratch, I will explain how much you need to invest, the best stock and ETF to, to buy, and the strategy that actually work. By the end of this video, you will have a step-by-step plan to achieve financial freedom through stock investing. How much do you need to invest? The first question most people ask is, how much money do you need to invest to reach $1 million? The answer depends on three things: how much you invest, how long you invest, and the average returns on your investment. If you invest $500 per month and earn an average return of 10% per year, it will take about 30 years to reach $1 million. If you increase your investment to $1,000 per month, you can reach $1 million in around 20 years. If you invest a lump sum of $50,000 and let it grow at 10% per year, you will have over $1 million in 25 years. $10 million in 25 years. The key takeaway is that consistency and times are more important than starting with a huge amount of money. Best stock and ETFs for long term growth. Investing in individual stock can be risky, so the best way to build wealth is by investing in a mix of stock and ETFs. The best ETFs for long-term growth include S&P 500 ETF. These track the 500 largest companies in the US and have historically returned around 10% per year. Examples include SPY, VOO, and IVV. Second is total stock market ETF. This gave you exposure to the entire stock market, including a small and mid-sized companies. Examples include VTI and SCHV. And third is dividend growth ETFs. These focus on companies that increase their dividends over time, providing both income and growth. Examples include VIG and SCHD. If you want to invest in individual stocks, look for companies with a strong financials, high earning growth, and a competitive advantage. Some of the best long term stocks include Apple, Microsoft, Amazon, Google, and Tesla. The power of compound interest. One of the biggest reason investing works is because of compound interest. This means your money earns return, and those returns start earning more returns over time. For example, if you invest $10,000 and earn 10% per year, you will have $11,000 after 1 year. In the second year, you earn 10% on $11,000, not just your original $10,000. This continues to grow, and over time, your portfolio grow exponentially. The earlier you start, the more time your money has to grow. Even if you can only invest a small amount at first, starting now is more important than waiting. Dollar cost averaging versus lump sum investment. There are two main ways to invest. You can either invest a lump sum all at once or use dollar cost averaging. First, lump sum investing means putting all your money into the market immediately. Studios so that these often lead to higher returns over time because markets tend to go up. Dollar cost averaging means investing a fixed amount every month no matter what the market is done or doing. These help reduce risk and avoid buying at the top of the market. If you have a large amount to invest, putting it in all at once is usually best. But it you are investing a small amount over time, dollar cost averaging is the safest strategy. Avoiding common investing mistake. Many investors make mistakes that slow down their progress. Here are the biggest ones to avoid. Trying to time the market. Now one can predict when the market will go up or down. The best strategy is to stay invested for the long term. Changing hot stocks. Just because a stock is popular does not mean it is a good investment. Always do your research. Panic selling. Market crash happen, but the worst thing you can do is sell. The best investor hold through downturns and keep buying, not diversifying. Putting all your money in one stock is too risky. Always spread your investment across different stock and ETF. The ultimate millionaire's strategy. To summarize, here is the step by step strategy to build a millions-dollar stock portfolio. Start investing as early as possible. Invest consistently every month, even in a small amounts. Focus on index funds and ETFs like the S&P 500. Let compound interest do the work. Avoid emotional investing and stick to the plan. If you follow this strategy, reaching one reaching $10 billion is not a question of it but when. Building a 10 million dollar stock portfolio is not about luck. It is about following a proven strategy and being patient. The most important thing you can do is start today. Whether you can invest $50, $500 or $5,000 per month. The key is to stay consistent. If you found this video helpful, make sure to like, subscribe and Leave a comment below on your investing strategy.